there, everyone. Welcome back to the Virtual Investor. Mike and Paul here. And today we're going to go do a deal review, actually two deal reviews. We're going to go over two sample deals that our acquisition manager got recently. And I believe they both closed here in the end of December, Mike. So why don't you take it from here?
Yeah, the first deal is in Pine Grove Road in Gaylord, Michigan. It was a REO auction property. We got it from XOME, the auction site XOME, XOME, great site. And we purchased it for about 77. We used a private lender to fund the deal. And this one, we actually could look at it from a rehab or a wholesale perspective. We'll get that in a second. And then the last thing I'll end with is the key. We talk about this all the time, especially when you're a virtual investor. You're not the expert in every market. So find a great agent to kind of help verify your numbers that you're seeing and provide any other inside info that's a local would know in the market. So let's take a look at the photos first before diving into the numbers. So here's the actual property. It says pending. We actually closed on it already recently. So this is kind of, hot off the press deal review. And as you can see here, the property, not terrible condition, right? It's livable, new paint, maybe new flooring. So when we were originally going through this property, we always talk about multiple exit strategies when we look at properties. This one kind of fell in that line. We had potential to maybe wholesale it, buy it and resell it as is, or buy it and do kind of a light rehab to get to a nice number. And looking at it initially, it's maybe just new flooring and new paint throughout the property. And then the cabinets, you can't see it here, but they were actually in good shape. So you could just repaint them essentially with new countertops and new appliances as well. So, and then it had I guess it is technically a finished basement, but
didn't quite finish.
Semi-finished. I don't know how you call it. I don't know. It's its own category between finished and unfinished.
And then a lot of potential there with that. Like that basically had plumbing, it had everything that you're looking for there. So easy for somebody to think, all right, I can come in here and finish it. It's not going to cost me a fortune. I can take my time.
Exactly. So when we originally looked at it here, here's just from a rehab perspective. And when we were looking at it to not finish the basement, we were seeing comps around 185. And that's us basically doing the updates I just said from the photos, new paint, new flooring, new kitchen appliances, backsplash countertops, and painting the cabinets essentially. And then maybe new vanity in the one bathroom, if I recall correctly. That gave us a budget around 30K using our rehab sheet that we use. And then when you add on, buyer's premium and us paying an agent and then transfer tax, et cetera, on the property, our initial thought was where maybe we could go up to 95,000 for a maximum bid. And this was what the profit would look like if we decided to rehab it. Good news is we were probably the only people bidding on this property, right, Paul? We actually were bid at 75. And I think if you added in like a 2K buyer's premium, that is where that is the extra 77 that we had on the sheet basically got us to.
Right.
That was our all-in cost. So now we have multiple exit strategies by hitting that 77 number. And then talking to the agent, they looked at a lot of information in there. They provided great value. They visited the property for us. And then we ultimately decided to buy and relist it. And you saw here on the sheet here, we had it listed for basically 120. And then, Paul kind of closes out here. What ended up happening and what did we net on the deal?
So we actually had, I think, multiple parties interested in this property. So again, when it's priced right, when Mike, we had there the after repair value of 185 or so, right? So you're finding something priced well below market. You have a lot of people looking at it, right? So we end up getting 127.5 with the seller assist. So I think our net number, like after the seller assist, was 120 and change. And our total bottom line net number after closing, purchase resale was $27,461.86. That's paying our private lender, paying insurance, paying utilities, all these different fees that we had on there. So that was not far up. That was basically $10,000 or $11,000 off our fix and flip number, right? Which we would always prefer to do this strategy rather than have to worry about the time for a contractor, right? Then dealing with them, finding them, getting all the supplies in, make sure there's no supply chain issues. With all those things that we run into, that's why our preference is just sell it as is if we can. And that was a great target property, which is a great example of one where it doesn't need a ton, but it still needs some love, right?
Yeah, that's a great point. This strategy that we have here, we could have netted 38, as you're saying, but that could have been a 4 to 6 month strategy.
Yes.
This one, we literally did nothing. We won it at auction. The agent then put it on the MLS for us, and we had multiple offers in that first week or two, and we netted 10K less, but in a lot less than like a quarter of the time, basically. So if you actually like annualize your return on investment on an annual rate, it's a lot bigger than what that would even been percentage wise. So
Totally.
it's a great quick in and out deal, good use of our capital.
Yeah. And always remember this, less is more. Yeah, we're taking a little less profit, but we are putting a lot less of our time and energy, right? Your time is worth how much to you? And for Mike and I, we value our time tremendously. So we'd rather take this a little bit less and go on and do another deal, right? Where we're doing similar type of things. That's always our preference. Depends what you want to do. If you're just getting started, you might want to maximize your deals, right? But if you want deal flow, and that's what we're looking for, deal flow, we prefer this strategy.
Yeah. You rinse and repeat the velocity of money, basically. Yeah,
absolutely.
So that's deal review number one. And our next deal review here is in East Texas, right on the state line of Texas and Arkansas. And it was a good lesson for our acquisition manager, because they could understand that, hey, when you comp, you can't cross state line, right? Comps are totally different on state lines. And in some cities, it vary block by block, but there's another good example of state line going through the middle of the town here, and you can only look at the Texas comps and not the Arkansas comps. Another great REO auction property. All in, we purchased it for $36,000. I believe that includes the buyer's premium. Can't remember off the top of my head. It does. Okay. So for those of you that don't utilize or haven't wanted an auction property, sometimes on auctions, the way they get paid is something called a buyer's premium. It could be, maybe 5% of purchase price or a minimum of $2,500, depending on pricing. And that gets added to your purchase contract. And that amount, is paid at settlement to the auction company when you buy. And then again, we utilize a private lender to fund this deal. And then we ended up wholesaling this one. And that was kind of like our goal on this one from the get-go. We knew we could rehab it for higher numbers, but if we go here, this is the property here. Single story, again, not terrible. We could have rehabbed it. We preferred not to. It needed a good amount of work, older property built in the 1930s. So it's not our typical properties that we want to rehab, given an older property.
And it was a big property too, a lot of square footage.
Yeah, 2,800 square feet here. So this is something that we said, hey, we're going to be our strategy. We're going to try to stick to it is wholesaling, unless something comes up that you have to rehabbing it. So we made sure our numbers look good, and we were darn near confident on 69. We did our analysis. We saw a lot of comps as is that the similar condition to our property selling for that. We got great intel from an agent as well on this. So going into the property, originally, we were thinking of making something around like 18K spread here. And what ultimately happened was, Paul, I guess, do you have the final numbers in front of you?
I do. So our final net, I know it's really close to that, right? Our final net number was $16,694.22. And what basically what it was, we took a cash buyer, I believe, on this one, if I remember right.
Yeah, we did.
As compared to mortgage buyers, we probably could have made more if we would have done a mortgage, but it would have to have been conventional. There would have been inspections. I believe they waived everything, right?
Yeah.
They waived all their inspections. So we took less. We took 60K on this one to go ahead and
that's a great thing I want to piggyback off of. When you get multiple offers or you get a good, strong cash offer that doesn't hit your number right away, based on our experience, go with that strong cash offer. Because when you get these offers, someone with a conventional loan on a case like this might have offered us another 5,000-7,000 more, but it's a 60-day close. There's going to be contingencies, like inspection periods. Something's going to come up. It's going to get delayed. That's going to eat, if you got private lenders and other holding costs, that's going to eat into profit by dragging that out. Whereas a cash buyer can do it in 3 weeks. It's being sold as is. There's no contingencies. Later this month it's going to sell. And, what's that worth to you? A lot of times we're willing to take a haircut on that cash offer just because we know the guarantee and the probability of it getting done is much higher than a mortgage.
Yeah, totally. And to piggyback on what you said there, we actually countered the cash buyer to try to get them closer to that number. To their credit, they stuck to their guns. Yeah. And we just said, you know what? All right, we're gonna take less, but we know it's going to be done with certainty. We're still making really good money.
Yeah.
And that's just a better way to do it. Now we have another example, and we're not going to go over today. It'll be next week in Linton, Indiana, again, where we had multiple offers coming in. And there was the cash offer, there was a mortgage offer, and ultimately we went with the cash offer. We'll go over that, and those numbers are pretty good. That'll be next week's one of next week's
Deal review. Yeah.
Deal reviews.
Cool.
So now this was a great one, Mike. Two great examples there, and two good profits. I mean, you're talking so you got 30, you got 43,000, 44,000 net profit on two properties. Really, really good returns, right? And
without picking up a hammer.
Yep, without picking up a hammer. We held them for about 3 to 5 weeks in totality between the two of them.
Both. Yeah.
So that, I mean, these are your classic no-brainers. These are what Mike and I look for, what we teach people what to look for. These are great examples. We'll teach you which ones not to look for in other videos, right? That we'll do our deal, not a deal, potentially in future videos here, where we show you some like this and show you which ones like, this is probably not a deal and here's why.
Yeah.
So, all right, Mike, great job on the analysis here. Really appreciate it.
All right. Looking forward to next week's deal review.
Absolutely, guys. Thank you again. If you liked it, make sure you click on the like and subscribe to the channel, and we will catch you in the next one.